There is one truth very few traders want to hear. It is not the losing streak that destroys your account the fastest. The most dangerous thing after a losing streak is not the money you have lost, not the drawdown percentage on the screen, and not the candles that moved against your expectations. The most dangerous thing is the person you become after that losing streak. Because after a few consecutive losses, you are no longer the same trader. You are still sitting in front of the same screen, still looking at the same chart, still using the same strategy, still following the same rules you once trusted. But the person clicking the button now is different. That person is more cautious, but not in the wise, disciplined way. That person is more afraid. That person doubts more. That person begins to see risk in places where they used to see opportunity. A setup that once looked obvious, one you would have taken almost without hesitation, now turns into a tense argument inside your head. Should I enter? Or should I wait a little longer? What if this one loses too? What if the market is trapping me? Should I reduce my size? Should I just skip this trade? And while you are still hesitating, price has already moved. You enter a little late. Your entry is a little worse. Your stop is a little wider. Your target feels a little farther away. And strangely, the very hesitation that was created to protect you starts damaging your system. This is what many traders fail to realize. A losing streak does not only reduce your account balance, it reduces the quality of your execution. It injures your confidence. It makes you stop trading the way your strategy needs to be traded. A good system, when executed by a calm trader, can produce profit. But that same system, when executed by a trader who is afraid, doubtful, desperate to recover, and trying to avoid another loss, can produce an entirely different result. And that is why many traders become confused. They ask themselves, why is the same strategy that used to work now losing over and over again? Sometimes, the answer is not in the strategy. Sometimes, the answer is in the person executing it. The strategy may not be broken, but your psychological state is damaged. Your execution is damaged. Your beliefs has cracked. And if you do not repair that part first, continuing to trade as usual is like driving a car with misaligned wheels while trying to accelerate on a highway. You can tell yourself that you need to be more disciplined. You can tell yourself that you need to trust the system. You can tell yourself that losing streaks are normal and you just need to keep executing. All of that sounds right, but it is not enough. Because the advice, just keep trusting the system, often treats lost traders like machines. As if a human being can take 5 consecutive losses, lose part of their account, take a hit to their ego, have their beliefs shaken, and then wake up the next morning clicking orders as coldly as if nothing happened. But real traders do not work that way. Human beings do not work that way. After a losing streak, you do not only need to protect your account, you need to protect your decision-making ability. You do not only need to ask, how do I make the money back? You need to ask a far more important question. How do I rebuild the quality of my execution? Because the account can recover. But if execution does not recover, the account will keep being pulled down. And this is where many traders make a mistake. They think the way to get through a losing streak is to push harder, focus more, analyze more, hold trades longer, find better setups, keep using the same 2R or 3R strategy, or even aim for farther targets to recover faster. But when confidence has been worn down, setups that demand a higher level of psychological strength become a burden. A 2R or 3R trade does not only require you to be right about direction, it requires you to have enough belief to hold through pullbacks. It requires you not to take profit too early when price has only moved halfway. It requires you not to move your stop just because you are afraid of losing unrealized profit. It requires you to tolerate price moving against you before it finally moves in your favor. When you are confident, you can do that. But after a losing streak, when the sound of recent losses is still echoing in your mind, those demands become much heavier. And when you force a weakened mind to operate a strategy that requires strong psychology, the result is usually not recovery. The result is deeper damage. So, what should you do? When in doubt, fall back to 1R. It sounds too simple. Some people may even think it sounds ordinary. 1-to-1, risk 1 unit to make 1 unit. Stop and target are the same distance from entry. Nothing spectacular, Nothing as exciting as 1 to 3 or 1 to 5 trades. Not the kind of setup that makes you want to screenshot it and show it off. But precisely because it is simple, it has a special power when you are losing direction. 1. 1R is not a strategy for proving that you are great. 1R is a tool for proving that you can still control yourself. And most importantly, 1R sets a very realistic standard. At a 1-to-1 ratio, you only need to win more than 50% of your trades to begin being profitable. Not 70%, not 80%, not every trade perfect. You only need to be better than a coin toss. Think carefully about that. If you flip a coin, the theoretical probability is 50 to 50. With 1R, one winning trade earns 1 unit, and one losing trade loses 1 unit. If you win exactly half and lose exactly half, the account is roughly flat, ignoring fees and slippage. But if you win just a little more than half, 52%, 53%, 55%, you have an edge. That means during a period of low confidence, you do not need the system to prove that it is exceptional. You only need it to prove that it is not random. If your entry zones have logic, if the market structure you read has a foundation, if your confirmation signals truly mean something, then you are not flipping a coin. You are trading with some kind of edge, even if it is small. And during a recovery phase, a small edge executed cleanly is far more valuable than a complex system executed by a fearful mind. This is the key point. After a losing streak, the first goal is not to make a lot of money. The first goal is to stop further damaging your ability to trade. The first goal is to create evidence that you can still do things correctly. Evidence that you can still wait for the right setup. Evidence that you can still enter according to your plan. Evidence that you can still place your stop in the right location. Evidence that you can still let the trade reach its target without interfering. This fee 7. Evidence that the system still functions. Because confidence does not return simply because you tell yourself, I need to be confident. Nobody regains belief by commanding themselves to believe. You cannot stand in front of a mirror, look yourself in the eyes, say, I am confident 10 times, and then trade like a steel warrior the next day. Trading does not work that way. Real confidence is built by evidence. Every time you follow the process correctly and see that process produce a reasonable result, a small brick is placed back into the foundation. Every time you wait for the right setup, enter the right zone, manage according to the plan, avoid breaking rules, and refuse to panic, you are telling your brain, look, we can still do this. Not through words, through experience. And the brain trusts experience more than words. That is why 1R has value. It helps you create completed trading cycles faster. The target is closer. The trade ends faster. The pressure is lower. There is less time for doubt to build up. You do not have to sit there watching a trade and profit by 1R while waiting for it to reach 3R, with every small pullback making your heart beat faster. With 1R, the trade is simpler. Either price reaches the target, or price hits the stop. The result is clear, compact, and clean. And during recovery, cleanliness matters more than greatness. You need trades that help you complete the execution loop. See the setup, enter the trade, place the stop, place the target, manage according to plan, record the result, review the lesson, repeat. Each loop like this, if done correctly, pulls you out of chaos and moves you back toward professionalism. But there is one extremely important point. Falling back to 1R does not mean you are allowed to trade carelessly. This is where many traders ruin the entire purpose of the recovery process. They lose a few trades, decide to trade 1-to-1 because it is easier, and then start entering weaker setups, less clear zones, and signals that have not fully confirmed. They think that because the target is closer, the probability of winning is higher, and therefore they can loosen their standards. Wrong. That is not recovery. That is gambling with a name that sounds more disciplined. When you switch to 1R, your entry standards must stay the same. The price zone must still be high quality. The market structure must still be clear. The confirmation must still have a reason. The stop must still be placed at the point where, if price reaches it, the original trade idea is truly invalidated. The only thing that changes is the target, not the quality of the trade, not the discipline, not the process, only the distance of the profit target. You are not lowering your standards. You are lowering the difficulty. And those two things are completely different. Lowering standards means allowing yourself to do lower quality things. Lowering difficulty means still doing things correctly, but in an environment that is easier to execute. A professional trader knows the difference. An amateur trader confuses the two, then wonders why 1R did not save them either. To use 1R properly, you need a clear transition rule. Do not wait until you feel terrible before deciding. Do not wait until after you lose your composure before saying, maybe I should simplify. Once you are already inside a losing streak, your decision-making ability has been affected. At that point, every decision can easily be colored by fear, regret, anger, or hope for a quick recovery. That is why the rule must be created beforehand. For example, after 3 consecutive losses, automatically switch to 1R. Or after the account draws down a certain percentage from the recent high, automatically switch to 1R. Or after a week in which losing trades outnumber winning trades, automatically switch to 1R. The exact rule depends on your system. But the important thing is that it must be defined while you are calm. A rule created when you are calm will protect you when you are no longer calm. And when the trigger appears, you do not negotiate. No saying, this setup is too beautiful. Let me take one more 2R trade. No saying, this one looks certain. I can push the target a little farther. No saying, I will just be flexible this one time. No. When the trigger appears, the ratio changes. And, immediately, from the next trade onward, you trade using the 1R structure. And you continue doing that until the return condition is met. The return condition must also be clear. You do not return to 2R or 3R just because the account has recovered a little. You do not return because the market looks good today. You do not return because you are bored with 1R. You return when execution has been confirmed. Maybe after 10 clean trades. Maybe after 15 rule-compliant trades. They do not all have to be winners, but they all must be executed correctly. Correct entry, correct stop, correct target. No reckless stop moving. No taking profit early out of fear. No trades outside the plan. No revenge trading. No increasing position size to recover losses. When you have a sequence of clean trades like that, you do not only have data, you have evidence that the trader inside you is returning. And then, returning to higher R strategies is no longer a jump into the dark. It becomes a natural continuation from a foundation that has been rebuilt. This is what many people overlook. They think recovery means the account has recovered. But real recovery is when the quality of decision-making has recovered. The account can rise again because of a few lucky trades. But if you are still entering in a state of fear, still moving stops, still taking profit too early, still breaking your plan, then that recovery is only temporary. You are not truly stable yet. You have only been spared by the market a few times. And if you mistake short-term luck for real recovery, the next losing streak will drag you even deeper. A sustainable trader does not only look at the balance, they look at behavior. Am I still doing things correctly? Can I still wait? Can I still cut losses properly? Can I still let winners reach the target? Can I still journal honestly? Can I still trade like someone with a plan? If the answer is not yet, then an account rebound is not enough. You need to keep rebuilding the foundation. And 1R is one of the most effective ways to do that. Because it meets you exactly where you are, not where you wish you were. Not the ideal version of yourself who can calmly hold a 3R trade through every pullback. Not the powerful version you imagine when you review historical charts and everything looks easy, but you as you are right now. A trader who has just been wounded by a losing streak. A trader who still has logic, but whose belief has weakened. A trader who still knows the system, but whose hand is no longer as steady when clicking the button. A trader who does not need more pressure, but needs a structure to regain rhythm. 1R does not require you to become a hero. It only requires you to do the basics correctly. And, in trading, survival often comes from doing the basics correctly for long enough. There is a very subtle form of arrogance in trading. It does not look like arrogance. It looks like discipline. It says, my strategy is 2R, so I must stick to it. It says, a professional trader does not change just because of a few losses. It says, if I drop to 1R, that means I am weak. It says, I must trust the system. It sounds very logical. It sounds very strong. But sometimes, that is not discipline. That is ego, wearing the clothes of discipline. Because real discipline is not continuing to do something just to prove that you are tough. Real discipline is doing what is appropriate for your current condition, even when it makes your ego uncomfortable. If your leg is injured, continuing to sprint is not discipline. Discipline is reducing intensity, recovering properly, and returning when your body is ready. Trading is the same. If your execution is damaged, if you can no longer hold trades, if you keep interfering with your plan, if every entry creates too much tension, then continuing to force yourself to trade at a high level of difficulty is not courage. It is stubbornness. And the market does not reward stubbornness. The market rewards adaptation. Many traders would rather keep losing money than admit they need to simplify, because simplifying makes them feel like they are moving backward. But the truth is, sometimes taking one step back is the only way to avoid falling off the cliff. 1R is not failure. It is a recovery room. It is where you return to stabilize your breathing. It is where you remind yourself of the basics. It is where you rebuild belief through small, clean, controlled actions. Not everyone needs to stay there forever, but every trader who survives long enough will eventually need to return there at some point. Because losing streaks are not exceptions. They are part of the game. Any system based on probability will have periods of consecutive losses. Even a system with a solid edge can produce several losses in a short period of time. That does not mean the system is dead. It only means probability is distributing itself in the most psychologically uncomfortable way. The problem is that human beings are terrible at enduring probability. We may understand intellectually that losing streaks are normal, but when it is our own money disappearing trade after trade, when the screen stays red, when the trading journal is filled with minus signs, reason begins to weaken. You start personalizing the result. Am I just bad at this? Maybe I am not suited for trading. Maybe the market has changed. Maybe this system no longer works. And those questions wear you down, not in a single day, but little by little. First, a little hesitation. Then, one early exit. Then, skipping one good setup. Then, entering a revenge trade because you missed the previous move. Then, increasing size because you want to recover. And then you look back and realize the problem is no longer the original losing streak. The problem is all the poor decisions born after that losing streak. This is why psychological recovery is more important than making the money back. A normal losing streak may only cost you a few R, but the wrong reaction to a losing streak can cost you an entire month, an entire account, or worse, your complete belief in your ability to trade. So, when a losing streak appears, you need a process that protects you from yourself. Not because you are weak, but because you are human. And human beings under pressure can easily turn a controllable problem into an unnecessary disaster. Falling back to 1R is a way of saying to yourself, we do not need to win big right now. We only need to trade clean again. We only need to prove that the process still works. We only need to regain rhythm. And when you think this way, the pressure decreases. You no longer see every trade as a battle that determines your self-worth. You no longer need the next trade to save the entire trading week. You no longer need the market to immediately return what it took. You only need to execute the next trade correctly. Then the next one. Then the next one. That is how a real trader returns. Not through one huge win, but through a sequence of small, correct actions. One reason 1R is powerful is that it shortens the distance between correct action and market feedback. When you trade 3R, you may enter correctly, but the trade may take a long time to reach the target. Along the way, it can pull back deeply. It can make you doubt. It can create many moments where you want to interfere. Each of those moments is a psychological test. And after a losing streak, you do not need too many psychological tests. You need recovery exercises. You need small victories in behavior. With 1R, the trade usually ends faster. Feedback comes faster. You can see more clearly whether the setup is working under current conditions. You collect data faster. And more importantly, you get more opportunities to complete the process correctly. That is what rebuilds confidence. Not a single winning trade, but repeating the correct process enough times until the brain begins to believe again. Imagine a trader who has just taken 6 consecutive losses. He used to trade 2R. Before, he could hold trades well. But after 6 losses, everything changes. The 7th trade appears. The setup is good. According to the system, it should be taken. He enters. Price moves 0. 7R in his favor. Then it starts to pull back. Before, he would have stayed calm. But now, the thought appears immediately. Do not let this winning trade turn into another loss. He exits early. A little later, price reaches the full 2R target. From a statistical perspective, the system just produced a winning trade. But in his account, that trade is only a small gain. And psychologically, it does not provide strong evidence that the system works because he knows he did not execute properly. The next trade comes. He enters again. Price moves slightly against him. He gets scared. He moves the stop closer. Price taps the stop and then moves in the intended direction. Another trade that could have won, or at least could have been managed correctly, becomes a new wound. At this point, the problem is no longer the system. The problem is that the trader is no longer in the right state to operate the system at its original difficulty. But what if that same trader switches to 1R? The 7th trade appears. The setup still has to meet the same standards. The entry is the same. The stop is the same. But the target is only 1R. Price moves 0. 7R. In his favor. He is still tense, but the target is closer now. He can hold a little longer. Price reaches 1R. The trade ends. Not a spectacular win, but a clean trade. A completed loop. A small piece of evidence. The next trade follows the same pattern. He does not need to become a perfect version of himself immediately. The 1R structure helps him execute better in his current state. And after many trades like that, something important begins to happen. He no longer fears the chart the way he did before. He begins to see again that his setups have meaning. He begins to believe again that if he does things correctly, results can return. He begins to enter with less hesitation. He begins to manage with less interference. He begins to think more clearly. That is recovery, quiet, unimpressive, but real. And trading needs real things more than impressive things. There is a sentence worth remembering. You do not need a stronger strategy when your psychology is weakened. You need a simpler structure so your psychology can become strong again. Remember that. When you are at your best, high-R setups can be excellent weapons. But when a losing streak has struck your belief, the best weapon is not always the most powerful one. The best weapon is the one you can use accurately in your current state. A sharp sword is useless if your hand is shaking. A powerful gun is useless if you can no longer aim. A 3R system is useless if you keep closing trades at 0. Out, 5R out of fear. 1R does not try to turn you into a hero. It helps you hold the weapon steadily again. And when your hand is steady, when your eyes are clear, when your breathing is stable, you can return to setups that demand more. But do not reverse the order. Do not try to trade like a confident trader when you do not yet have the evidence to be confident. Do not try to force yourself back to peak performance through a few motivational sentences. Build it again. One trade at a time. One more important point. 1R is not a place to hide from improvement. It is not an excuse to say, I will only trade 1-to-1 forever because it is easier. It is a phase with a purpose. The purpose is to restore execution. The purpose is to reduce pressure. The purpose is to accumulate evidence. The purpose is to return to the main system from a better state. That is why journaling is extremely important during this phase. You do not only record win or loss. You record whether you entered the correct setup. You record whether you respected the stop. You record whether you took the target correctly. You record whether you interfered because of emotion. You record how you felt before entering. You record how you felt while the trade was running. You record how you felt after the trade ended. Because what you are tracking is not only P&L. You are tracking the return of discipline. You are observing whether you are truly recovering. or whether a few winning trades are simply hiding the same old damage. A serious trader looks at the journal and asks, was this trade clean? Not only did this trade win, because during recovery, a winning trade that breaks the rules is still dangerous. It teaches you that rule-breaking luck can be rewarded. And that is a toxic lesson. On the other hand, a losing trade executed correctly can still be part of recovery, because it proves that you did what was within your control. Trading is not about controlling every outcome. Trading is about controlling repeated behavior in an uncertain environment. If you understand this, you will no longer see 1R as a basic or ordinary tactic. You will see it as a training room, a place where you practice the basic movements again. A fighter returning from injury does not step back into the ring by immediately taking the biggest fight of his life. He returns through footwork, through the jab, through defense, through repeating basic movements thousands of times. A trader is the same. After a losing streak, you return to the basics. Not because basics are inferior, but because basics are what keep you alive. If you cannot enter cleanly at 1R, you are not ready for 3R. If you cannot hold a trade to a nearby target, you are not ready to hold one to a distant target. If you cannot accept a small loss, you are not ready to handle greater volatility. If you cannot do the right thing under low pressure, do not expect yourself to do the right thing under high pressure. This is a direct truth, but it is the kind of truth that can save you. Many traders want to jump straight into advanced things. They want to optimize the strategy. They want to find a better indicator. They want to learn more complex patterns. They want to find a way to catch tops and bottoms more precisely. But what they need is not more complexity. What they need is to execute simple things consistently. After a losing streak, do not immediately ask, do I need a new strategy? Ask first, am I still executing the old strategy correctly? If the answer is no, then changing the strategy is just a way to avoid the real problem. You carry the same damage psychology into a new system, and then you break it in the same way. You change the chart, change the time frame, change the indicator, change the method. But the person clicking the button is still the same person who is afraid. And so the loop continues. 1R forces you to stop that loop. It says, wait, do not change everything yet. First, see whether you can still do the basics correctly. And when you are doing things correctly again, you can evaluate the system more fairly. Because a strategy should only be judged when it has been executed properly. If you enter at the wrong point, exit at the wrong point, move the stop, take profit too early, skip good setups, and enter bad setups, then the result is not the result of the system. It is the result of distorted execution. And if you use those distorted results to conclude that the system no longer works, you may throw away a real edge, simply because you are going through a weak psychological phase. Do not do that. Give your system a chance to perform under clean execution. 1R helps you do that. It lowers the difficulty, so you can return to accuracy. It makes you focus on doing things correctly instead of trying to win big. It pulls you out of the ego battle and brings you back to the process. And when the process returns, results have a foundation to return as well. Remember, the goal of a trader is not to win every trade. The goal is to survive long enough for the edge to express itself. But the edge only expresses itself when you are stable enough to execute it. If every losing streak makes you break rules, the edge has no chance. If every drawdown makes you increase position size, the edge has no chance. If every moment of fear makes you close all winners too early, the edge has no chance. If you do not protect execution, you do not protect the edge. And if you do not protect the edge, your account is only a matter of time. So 1R is not just a risk-reward ratio. It is a psychological defense mechanism. It is how you slow down when the road is slippery. It is how you lower the weight when your muscles are tired. It is how you regain your breath after the market has punched you in the face. Maybe you do not like it. Maybe your ego feels uncomfortable. Maybe you are used to 2R or 3R trades and feel that 1R is too small. But the question is not what you like. The question is, what helps you recover? A good doctor does not prescribe medicine based on the patient's preferences. He prescribes it based on the patient's actual condition. A trader must become their own doctor. If the problem is lack of knowledge, you study more. If the problem is lack of data, you backtest more. Formation. If the problem is risk management, you reduce risk. If the problem is damaged execution after a losing streak, you lower the difficulty and recover through clean trades. Correct diagnosis, correct treatment. That is professionalism. Not always stronger, not always bigger, not always pushing harder. Sometimes, professionalism is knowing when to pause, when to simplify, and how to return properly. Imagine you are in a losing streak. You look at the account and see that you have lost a meaningful portion of this month's profits. Two voices begin speaking in your head. One impatient voice says, "We need to make it back. One good 3R trade and everything will be fine." Another voice, smaller but wiser, says, "No. The first thing is to restore clean execution." The trader who survives is the one who can hear the second voice. It is not always loud. It is not always exciting, but it is usually right. The first voice wants immediate relief. The second voice wants long-term survival. The first voice cares about getting the money back. The second voice cares about getting you back. And in trading, getting yourself back is more important than getting back a sum of money. Because a stable trader can make the money back, but an unstable trader can destroy everything, even with a good system in hand. This is the final reason why, when in doubt, you should return to 1R. Not because it is perfect, not because it fits every phase, not because it will instantly turn you into a winning trader, but because it creates a bridge. A bridge from chaos back to control, from doubt back to belief, from rule-breaking back to process, from trying to recover losses back to professional trading. And that bridge is built with small, clean, simple trades. One correct entry, one correct stop, one correct target, one moment of not interfering, one honest journal entry, one accepted outcome, one time doing the right thing, even after being hurt, then one more, and one more, until you realize you have returned. Not because you forced yourself to believe, but because you have enough evidence to believe. At that point, when you return to 2R or 3R, you are not returning with blind hope. You return with steadier hands, with a clearer mind, with a sequence of clean trades behind you, with confidence that was not imagined, but rebuilt. That is the difference. An amateur trader returns because they want to make money quickly. A professional trader returns because execution is ready. One returns because of emotion. The other returns because of evidence. And in the market, evidence is always more trustworthy than emotion. So the next time you fall into a losing streak, do not immediately conclude that you are bad. Do not immediately conclude that the system is dead. Do not immediately change methods. Do not immediately increase position size. Do not immediately search for one huge trade to get everything back. Pause for a moment. Look at what has truly been damaged. Maybe it is not only the account. Maybe it is confidence. Maybe it is the ability to enter without hesitation. Maybe it is the ability to hold without fear. Maybe it is the ability to follow the plan when recent results are moving against you. If that is true, then the solution is not to demand more from yourself. The solution is to create conditions where you can do things correctly again. Return to 1R. Keep the same entry standards. Keep the same stop discipline. Set the target equal to the risk distance. Let the trade complete itself. Record everything. Accumulate evidence. And give yourself time to return. Because traders who survive long-term are not traders who never lose. Surviving traders are the ones who know what to do after they lose. They do not let a normal losing streak turn into an account crisis. They do not let ego prevent them from using the right tool. They do not try to prove they are strong by continuing to trade in a weakened state. They are calm enough to simplify, humble enough to recover, disciplined enough to return to the basics, and intelligent enough to understand that in trading, sometimes the fastest way forward is to temporarily lower the difficulty. When in doubt, return to 1R. Not because you are afraid, but because you understand the game. Not because you are weak, but because you are protecting the most important thing, your ability to execute. Not because you are giving up big profits, but because you know big profits only matter when they are built on a stable foundation. 1R is the old reliable friend. It is not loud. It is not glamorous. It does not make you feel like a genius. But when your psychology is damaged, It brings you back to what matters most. Executing one trade correctly, then another, then another. And sometimes, those simple trades are what save your entire trading career. Because in the end, the market does not need you to prove that you are brave. The market only requires you to survive long enough, execute cleanly enough, and give your edge enough time to speak. When everything is clear, trade according to the plan. When you are confident, exploit the edge. But when you are in doubt, when a losing streak has made your hand shake, when belief has grown thin, when every trade has become a battle inside your head, do not force it. Simplify. Return to 1R. Because sometimes, the thing that brings you back is not one huge win. It is one small trade executed perfectly. Then another one. Then another one. Until you remember that you do not need to defeat the market with strength. You only need to trade correctly enough, long enough, and calmly enough for your edge to reveal itself. And that is when you do not only recover the account, you recover yourself. If this message helped you see trading from a clearer perspective, take a second to support the channel by hitting the like button. And if you want more videos about trading psychology, discipline, risk management, and how to become a more consistent trader, make sure to subscribe and turn on notifications. Your support helps this channel grow and allows me to keep creating content that helps traders stay calm, stay disciplined, and survive long enough for their edge to work. Thank you for watching, and I'll see you in the next video.